Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar a bit here stronger, and obviously, correspondingly, the euro weaker. We've also, interestingly here, we've been looking for this move for about a couple of weeks, is the move in the gold market down to the 1293 area. We did go on and get that area. We've been looking at for a little while. And the reason we had talked about that or was looking for that move, remember we talked about there hadn't been the opportunity for what we called value buying. Moment. And the way we're referring to this is, remember, as we made that run up in here, we were looking for potential pullbacks. And remember, we were making this run up here in the upper 1280s, 1290s. There was still a thought that they might slide back to the 1250s, and we said, well, we're going to see some good strong buying around 1267. Well, you didn't get that opportunity, so we ran up in here. I looked like we may try and push here. We couldn't get to 1304. Once we started to push high, we said, well, they're not going to be satisfied with 1304. They're going to 1323, which was the 78% of this entire move. And we saw a little pause. We made another run. So the key thing is that there never was an opportunity for someone to step in and say, I'll pick it up $25 lower and I'm hanging on for a long time. So we knew that the stops were going to be very, very tight. We've been talking about that increasingly more so over the last week. And we thought that the opportunity was that the market would, and we even mentioned this towards the end of the last week or middle of last week, be very careful. This thing is probably going to go straight on down to about 1293. Well, we've actually gone below that. We'll get to the Asian analysis. We're looking for support around 1280, and there's 38%, I believe, is just below that. We'll go on and get to that, but obviously a big mover. We've lost a lot of momentum. Obviously, interest rates moving higher. That certainly had its impact, and certainly with the interest rates moving higher, certainly had its very own impact with the dollar yen, which has made runs up here to the 112 area. We've got some talk about that in the Asian analysis or Asian update, our analysis, which I do basic technical, but I usually refer to it as the Asian update. And then, of course, the euro rotating lower here. We just have not, and same thing, we'll cover that in the analysis too, is we just have not been able to crack that key area here in the euro dollar, which was the 1392 area. We made multiple stabs here, and we just were simply not able to get beyond that on a closing basis. One of the reasons why we talked about why the touches coming across here, which I like to go against the closing bars, whether they be 30-minute, 2-hour daily, why they're so important. We made multiple stabs up in here, and we said the real resistance wasn't going to come up in here if you were looking for a market to get above this area and then say, okay, we have something behind it. We made little minor stabs. I mean, we didn't even make it to 1429. So we made some minor stabs. Now this market is open to rotating lower here. Well, we'll get into all that. We'll go on and take a quick preview of the news. It's very, very, very light. And then we'll get into the analysis. So moving on to the morning bid, May adds cash boost for towns to Brexit. British Prime Minister Theresa May sets out plans today for a £1.6 billion fund to help boost economic growth in Brexit, supporting communities, particularly in the north of England. Critics describe the move as a bare-faced bribe to the mainly opposition Labour lawmakers elected in these so-called left-behind regions in the UK, encouraging them to get behind her Brexit deal when it comes back to Parliament sometime before March the 12th. If that wasn't enough, Finance Minister Philip Hammond will be able to offer an enhanced deal dividend of extra public spending in his spring budget statement set for March 13th. That will come from the 15 billion euro cushion which Hammond announced earlier in October, now boosted by better than expected tax receipts since the start of the year. It remains to be seen whether such enticements may make May's deal any more popular. Hard Brexiters have meanwhile set out that they call 3 tests for whether they can back any tweaked agreement, still essentially stipulating that the temporary nature of the Irish backstop be set in stone. And moving on to markets. More positive nods and rinks Winks about an imminent U.S.-China trade deal have lifted the world equity markets. First thing, Shanghai and Tokyo benchmarks outperformed with gains of more than 1%. Found a Wall Street Journal article saying the agreement could be signed around on the summit on March 27th. But President Trump's broadside on Saturday against the Federal Reserve Chair Jerome Powell and an overtly strong dollar will get as much attention on Monday, even though the dollar held firm against the yen and euro. First thing, we have a gentleman that likes a very strong dollar at the Fed, Trump told a conservative policy action conference. I want a strong dollar, but I want a dollar that's great for our country, not a dollar that's so strong that it's prohibitive for us to deal with other nations. Dollar yen tested its highest levels of the year, just above 112 before backing off, and euro dollar was low around 13.55. Well, we're even lower now. China's offshore yuan was a fraction stronger, with the U.S. demands that China not devalue the yuan, reportedly part of the trade agreement in train. China's annual National People's Congress also takes place this week and will be watched closely for signs of economy supporting measures. And the currency market index was slightly lower, with the MSCI's emerging equity index a shade higher. Sterling was about 0.25% higher against the dollar, with the latest weekend Brexit report showing some possible softening of the UK's demands on Brussels to change provisions for the Irish border backstop, and also a softening of objectives to UK PMA's deal among pro-Brexit factions within her own ruling party. 10-year U.S. Treasury yields were firm above 2 3/4 and close to their highest since January. Well, certainly that has impacted the gold market. Brent crude was just above $65, and European and U.S. futures were also 0.4% higher. Optimism of the trade deal comes in as an important time as global economic readings are still largely coming in below forecasts. Citi's Economic Surprise Index for the G10 major world economies fell on Monday to its most negative reading in almost 7 years. Elsewhere, Greece's benchmark 10-year government bond yields dropped to their lowest level in over a year on Monday, close to a 12-year low following a two-notch ratings upgrade from Moody's late last week. And that's about it on this. And let's move on. And this is just a recap real quickly with the dollar. This was from the last week's report, but the Canadian dollar closed lower against its U.S. counterparts on Friday after news that Canada's economy grew at a slower than forecast pace in the fourth quarter. Lowered expectations the Bank of Canada would raise interest rates anytime soon. GDP edged down 1/10 in December as a result of the reduced output across most goods-producing industries. It was softer than expected, obviously with a 0.25% 0.4% in GDP terms, said Nathan Jansen, senior economist at Royal Bank of Canada. It looks like a lot of weakness can be attributed to softening in the oil patch. If you're the Bank of Canada, it's another reason to hold off on raising rates for a while. And on to the Aussie and New Zealand dollars. They struggled to make much of the Sino-US progress. The Australian and New Zealand dollars flatlined on Monday as disappointed domestic and data offset reports. Washington and China were nearing a truce in their long trade war. The Aussie dollar was stuck at 70.88, having topped out at 71.27. They initially gained on Wall Street Journal report that President Trump and Chinese President Xi Jinping could reach a formal trade deal at a summit at around March 27th, given progress in talks. China would lower tariffs on U.S.-made goods, including agricultural products, chemicals, and cars, in exchange for sanction relief from Washington. Trump also renewed criticism of a strong U.S. dollar, which he said was hurting competitiveness. However, the Aussie came unstuck within a batch of domestic data, underwhelming, and seemed to add to the risk that the key report on economic growth, GDP, on Wednesday would miss forecasts. Poor outcome, particularly a contraction in GDP, would stoke speculation of a cut in interest rates. The indicators released would also suggest the Australian Q4 GDP will be soft, says CBA economist Joseph Carpuso. Median forecast is set for a modest rise of 0.4 in gross domestic product for the December quarter, which would set annual growth slow to 2.6%. That would also fall short of the RBA's own expectations as it prepares for its March meeting on Tuesday. The post statement could push the Aussie dollar lower if the RBA highlights the growing downside risk to the world economy and the Australian consumer spending via a weakening housing market, added Carpuso. And lastly, The long dollar bets thrive in low volatility. The dollar consolidated gains on Monday after posting its biggest monthly rise in 4 months, as low volatility prompted investors to buy the currency, particularly against the yen. On a risk-adjusted basis, the dollar continues to be the most attractive investment currency against the majors, said Valentin Marinov. Hopes that some of the world's major central banks would raise interest rates this year has been faded in recent weeks amid a tepid economic data. Some analysts now expect a fresh round of bank funding at a European Central Bank meeting later this week, boosting the dollar. Hedge funds have ramped up their long dollar bets, with latest position data showing net positions rising to 12.25 billion for the week ending March. With volatility expected to stay low, hedge funds have also placed bets on emerging market currencies versus the dollar. Those bets are now at a one-year high. Media reports the U.S. and China might reach a formal agreement at a summit around March 27th is pushing stocks higher and prompting traders to buy the Chinese yuan and other proxy currencies such as the Aussie dollar, although we're not seeing that in the Aussie dollar. So let's go on and move into the analysis. And we've seen this euro rotate lower. Let's go and move in. So it says the euro remains mired in a technical rut, incapable of sustaining a move above 114. A daily close above 1360 will open a test to 1291. Well, we're certainly getting that. We're certainly in the position for that right now. As you look here with the euro, and we've just simply not been able to move any higher. Now, we had talked about, remember, the disparity between here, and we've pretty much offset that at this point. And now you see here that we're basically almost just kissing on the EMAs and now open to rotating lower here. So with that, when we get that close below 1360, we're looking for a push to 1291. Now, when we look at where we stand as far as resistance, we can go on and take a look here on the 2-hour. And resistance at this point for today is going to be 1386. It's actually 1387. I don't doubt we're going to get anything that's going to rotate any higher, but that would be the resistance right there at 1386. Support comes in fairly clear right now. It's going to be this 1329 level. Now, it does certainly look like we're going to rotate lower, as we mentioned, and we'll mark this off right now. And you saw the 1360 noted there. So if we get that close, a daily close below 1360, it certainly opens the door for us to test at 1291. And there's nothing we've seen here in the euro to suggest, that the market will move higher. It's going to take something drastic for all of a sudden things to turn around and flip the other way, and the dollar to start falling apart and the euro to turn around and take off. But certainly the target here would be on this 1291 here. But our support, as I mentioned, is going to be the 1329. You can even make the case right there, just a hair lower. If we do push him here, actually, I'm going to move this a little bit lower with this daily here. Let's go and mark this off. Right there, we'll call it 1324. And let's go move into the cable. cable taking a respite after a strong run. Initial support comes in at 31.58 with secondary support at 31.11. Over time, expecting a run to 36.14, which would be the 61% of 23.74 to 43.78, confluencing with the level of 36.07. Initial resistance comes in at 32.73. So we'll take a look here on the cable. In time, I'm looking for a move up here to this 36 over time. And that's going to confluence with this 61%. But for right now, as I mentioned, just taking a bit of a respite as we back down a little bit. But we did mention here that resistance will come in at 32.73. We'll take a look here on the 2-hour chart. You can see that right there. Coming in right there, 32.73. That'll be our initial resistance here on the cable for today. And certainly with May going out, this probably a little bit with her offerings, if you want to call it that, probably going to be a little bit supportive for the cable. So probably not looking for too much downside. This might be a little bit close to push it at 32.13. So we'll just offer this just a little bit right there at 32.04. But probably no reason for the cable to back off too much. But we'll go right here with 32.04 as our support. And that's on just this gentle pullback. But on the analysis, as I said, the initial support on a further pullback comes in at 31.58. Okay, right down here if we were to see a bigger pullback. But for right now, for today, cable holding up well. We'll go with this 32.04. Let's go and move into the Aussie dollar. So it says the Aussie momentum remains lower via the exponential moving averages, targeting 70.27 before a challenge of major support at 69.35. Now we know that we probably, I guess they were thinking we'd probably get a little bit better support here with U.S.-China trade talks. I thought that there might be something there on March the 27th. Between China and the U.S. Signing off a potential agreement and a cessation of this trade war. But we do also have some Australian data coming out, RBA coming, and the thought is that the RBA may be peddling things a little bit softer and focusing on the risks. And if that's going to be the case, then we can certainly rotate lower. Now, when you look at the exponential moving averages, this has been on a sell mode. And if you look here, you see where it just kissed right here. So it continues in that sell mode, and you're seeing this, move lower. Yeah, we popped up in here, but in the exponential moving averages where they were never able to cross over. So they remained in that sell mode, which is the way you'd want to stay with this as far as the momentum. So we're looking for 70.27 for this market to go and move down before a potential challenge down here at 69.35 right here. This was huge after the flash crash. So The more obvious target where they want to go to is 70.27, but as things continue to get softer, we can really push this door open and challenge here down to 69.35. So as we're mentioning here, with these EMAs staying that soft, we're targeting 70.27 before a challenge of that major support of 69.35. Well, once we get this data continues to be weaker, and depending on what the RBA does, who knows, we might get there a heck of a lot faster than we think. But with the exponential moving averages continue to stay weak like this in sell mode, then you're going to rotate lower, and the market has to have a target where it's going to go to, and before things were trying even up a little bit, and that would be right here at 70.27. Depending on how weak, I mean, not depending, but considering how weak the Aussie is, I don't see where there's any need to look at a very shorter term target in this case. You could make the case right in here, a little bit of support here at 70.59, but that isn't even that far away. And I think the market really with these exponential moving averages staying so weak, will want to rotate lower, and that target would be 70.27. We put on here resistance will be at 71.25. We can go on and take a look here on the 2-hour. So now until you get up in here, you see right there. And you can make the case right in there, even just a little bit lower, right there with this level here. So we'll call it 71.18, 71.18 right there. I think he's going to have a very tough time trying to get beyond that. And let's go move into the Swissy. Well, things are looking a little bit stronger here with the dollar Swiss, and certainly the strength of the dollar coming back has certainly aided to that. Although I think we could push it higher. Look at this par 21 we've been having here for the last few days is holding like a rock on here. I don't know. We have par 06 because that par 21. Look how that thing's been holding. I guess we may have tightened things up a little bit here, but this par 21 will go back to this par 21 here and keep that in place. I'm not sure why we even rotated this down to par 06. Let's go par 21. I guess on that move, yeah, I know why we did that, because remember we were looking for an expected move down to 99.53. Remember 99.53 was the 38% of this entire move, and we even overshot it, but we came back rather smartly, so that's why we rotated it down to par 06. Well, they've made this run up here to par 21. Let's take a look as far as support. Support's going to come in right there at 99.80. Obviously, you've got a lot of touches coming in right here, a lot of bastion of support here at 99.87, but that's a little bit too close here. We want to move this a little bit lower, so let's call it right there, 99.79 for today. After coming down here and successfully testing at 38%. We were looking for that. That's the number we were looking at for most of last week. And let's move into the dollar CAD. Boy, what a resounding defense of this area here. This 31.36, just about when everything looked perilously terrible. Boy, did the dollar come back, a dollar CAD come back on that weak GDP. Well, we're going and look at the Asian analysis on this. So it says the dollar CAD successfully defended the key daily support at 31.36, breaking through the trend line. Potential moves to 34.60 is open, and resistance is 33.54. Initial support is 32.54 on the 2-hour with resistance at 33.26. So let's go and take a look at this on the dollar CAD. A lot of numbers being thrown out there. Well, this was huge right here, defending this 31.36. So really, the door was open. If we lost that, we were going to go right down here and push even lower. And we ended up holding this. Obviously, we came back really very strongly, and as I said, broke this downtrend line, and the market is really open to eventually testing this 34. And the reason that is because we were at the precipice here of really rotating lower. I remember even buying down here, and wish I would have hung on that initial move lower. And the market was really having a tough time at the time. I mean, I think it rallied back up to, what was it, like 40, and then it fell back. Then it went up to like the mid 50s and started to slide back again. But obviously, Friday changed everything around here with the weaker GDP readings, and now we've broken this trend line. Well, after multiple tests down here and successfully defending a very key area, now the door opens for us to push even higher. So potentially we can come back up here and make it to 34.18. The initial target on the daily is going to be 33.54. This is where you probably see the market pause, but on a very shorter term basis, we've had a pretty good run here in the dollar CAD. So on a shorter term basis, where you look here on the 2-hour chart, yeah, probably going to go and get a pause around here, this 33.26. Now we talked about 33.54, huge level on the daily, which you would think you would get a moderate pause from that, but at least for today, it's going to be 33.26. And this is now flipped to bullish. Support, we mentioned, would come in at 32.54, and coming in right there, just a little bit lower. We'll look at the 2-hour. Right there, 56, but we have it listed right there, 32.54. And definitely bullish now. Let's go and move into the dollar peso. This thing has really got a little bit of head of steam on it. It says the peso's online for a challenge of 1938.7 level, confluence with the 1937.8 at the 78% of this move of 1903 to 1947. Support comes in at 1930. well, 1930.308 with initial resistance at 1936.2. Let's go and take a look at this dollar peso. And boy, is this thing really moving and scooting. Look at this. Continue to move higher. Well, we're at our resistance right now. This is our initial resistance, 1936. Now we're looking for a move up here to 1938, right here, confluencing with the 1938.7. This level coming in here. We're looking at the 2-hour chart, and 1937.8 is a 78%. We do have some initial resistance right here at 1936, right there. You can see that. We just tagged it. You may see a little bit of a pause from here, but the door is certainly open for them to push even higher up to this 1938. So we're going to put our resistance right here, 19.362, which we just got there. Okay, so 19.362. This is certainly bullish now. But we're looking for a move up here to 1938. Okay, support, well, you can see it right there, 19.308. That's going to be our support. Boys, this ain't come back. You know, that 19.308 seems a ways off, but we've had such a fabulous run, although I wouldn't expect this thing to turn around and come apart. I might be able to push it a little bit higher, closer to 1932. But this is good, solid support. If we turn around and rotate a little bit lower, but this is a nice little pause right in here at 1936.02. Not right there, good little area for a pause, and then a run up here towards this 1938 and 1937.8 is the 78% of this entire move of 1903 to 1947. Well, it's been a good solid move up there. We're going to move into the crude oil. This market is still holding its own very strongly up in here. We had this 57.18 was our area, and I thought we'd rotate much lower. We've come back to challenge it, take out the highs. You can see that here, but still rotating back a bit. But the 57.18 is very key. Let's go and take a look at it on the 2-hour. Kind of gives us a perspective. If you look at what we've seen, I mean, this crude oil, I'm still amazed at how it's holding up. The only thing I can think of is this whole Chinese talk. They're thinking they'll get one more last push because, you know, when you look at the weaker global economic readings, I'm just surprised to see crude still holding up at these levels. At least we haven't seen a far better correction, not even a huge correction, just something to take us down to maybe, let's say, 54, 53 and a half. And it's just held up very, very well. So let's go and take a look at it on the 2-hour. Well, crude might get a little bit of additional support with equities doing better, although you probably would have expected an even better support. Now, the thought that we came back and we took out the highs and we turned around and corrected quite a bit, I can't believe it's not going to be lost, technically speaking. And why? Let's see this over here. I think resistance would, that's a little bit tight. I think it's going to have a tough time even getting to that part, but we shall see. But with, once again, with equities being stronger, the thought that there may be an agreement or a signed agreement on March, they have a date of March 27th. That might give it that little extra kicker. So from a technical standpoint, that's going to be the resistance, 56.48. Support will come in right there at 55.17. Still a long ways off. Let's go split the middle right there. It's going to be 55.24. 55.24. As I mentioned, we may get a little bit of extra juice here. With the rise in equities this morning, that may give them a little bit of extra juice, but I think once you took out this high and then you turn around and failed miserably, really very quickly, I think any rallies back. But like I said, we've seen this story before and then we come back strong. But from a technical standpoint, I think it would have a very, very tough time trying to get past this 56.48. Well, getting on to the dollar yen, boy, have we seen a huge move back in here with the dollar yen, and we'll get to the analysis here. Since the dollar yen is on track to run to 12.43, which is a 78% of the move of 468 to 14.54. Upside level is 12.79 with trend line in the 12.60s. Support comes in at 11.36. So let's go and take a look here with the dollar yen. What a phenomenal run here. And obviously this has been sparked by the yields that we've seen, U.S. yields moving higher. All about those yields. We used to have that saying, all about the ZB. Well, we've seen these yields continue to move higher here. So the door is now open for them to move to this 1243 right here, the 78%. And probably just a matter of time before we eventually go and get up there. I think that's almost going to work like a magnet. There is some little bit of resistance at 1232, but it's going to be this 1243. Now, look, this 1279 is coming in, and this what I was mentioning was this trend line comes in at the 1260. So this is the most logical area for them to target. It may take a little bit of time, maybe not that much time to get there to 1279. But in the meantime, we'll look at 1243 being the 78% of this entire move here. That will be our resistance. On a daily, we're looking for support at 1136, but on the 2 hour, certainly would come in well before that. The market kind of acting like it wants to rotate a little bit lower. We'll go right here at 1144 on the 2 hour. 1144, which has been a good key level before. We'll go with that with our support. Key daily level, remember, is at 1136, but we'll go with 1144. But you can see what a huge run this market's made. Even with this little hangman here, they still pushed it a little bit higher. That may allow us, like I said, to ease back a little bit. They may have to come back here and find some more support. But once again, that 1243 is going to work like a beacon where the market eventually want to go to. But for right now, like I said, maybe we'll ease back just a bit, but maybe not a whole lot. And I believe we'll find buyers down here, avid buyers here at this 1144. With that, we'll move into the Aussie yen. So it says the Aussie yen is targeting 78.87, confluence with the trend line as the market is unable to make headway above 79.56. Initial resistance is going to be 79.39. So let's go and move into the Aussie yen. Well, here's that key 79.56, and the market, despite equities being higher, has not been able to make any headway. Well, obviously, the Aussie has its own issues. That's case in point right there. But we have not been able to, from a technical standpoint, to get beyond the 79.56. And remember, 79.10 has been the pivot. Well, I think we're going to get beyond that pivot as we've not been able to make any headway, and that would have us targeting here at 78.87. Right here. That would confluence with this uptrend line here. So I think this is what we're going to go to is the 78.87. Look, you can make a case, oh, there's a little bit of support here at 79.10. There may be a dab, but I think this market will in turn, especially when you think about the weakness that we're seeing here in Aussie data and the expectations that the RBA may be, referencing the risk to the economy. We may even, blow right through there. But at least for now, the market, I think, will be targeting here for the 78.87. That would be our support. And we're referencing here, initial resistance is going to come in at 79.39. Well, with the Aussie, we always just look at it at least I do, look at it on just a 2-hour chart. So we're looking at 79.39 right there. There we go. With that, we'll move into the cash dollar index. Since the dollar successfully defended the pivot target from last week, remember we were looking for 97.07. Upside resistance is at 96.81 with support at 95.80. Weekly chart had a hammer, so momentum will press higher. So let's get into the dollar index. Now, look, when you look at it on the daily, we certainly defended that pivot. This is the area that, remember, we're looking for to move down to 96.07, the pivot. And the market it got beyond it, but it defended that 96.07. Well, when you look in here before you got to this day here, it's kind of like, well, we're kind of mixed bagging it. But if you look at it here on the weekly, you can see we had a nice little hammer here. So that's what I'm saying. Momentum was still going to go on and press higher. Let's move up here. Well, we're seeing that momentum moving higher with the daily. But the real resistance isn't going to come up till 96.81. So you can bop around in here back and forth, but this is where the real resistance is going to come in. So that's what we want to go and list as our resistance. And the market came back smartly on Friday. That 95.80 was still our support and kept the market. We didn't even make it all the way. We came close to the 80, but like I said, the market did very, very well to go and defend that. Well, support, and actually what we've been looking at on the dollar index, remember all last week we're looking at it on via the 2-hour chart. And there's that pivot I was talking about. Obviously we broke above this. There's a key level right there, the pivot. Support right now is going to come in right there. $96.21. And let's go move into the gold market. Well, we've been calling for this move down to 1293 for nearly almost 2 weeks. And we got it. Take a look here. I don't know what happened to my update. But I did have an update here. I don't know what the heck happened to it. Well, let's go move into the gold. So we've been looking for a move down here for this market to rotate lower to 1293. And as I mentioned before, not to sound like a broken record, and we've gone over it so many times, you'll probably know it verbatim, but and we covered it quickly this morning, which was the reason is because the lack of value buying. There never was, or forget lack, just call it the opportunity for value buying. When the market rallied up in here, everybody kept thinking the market's going to come lower. And when we made this run up here, we're really struggling up here at the time in the 1280s. So people were still thinking we'd make it down to about the 1250s, maybe even a little bit lower. Well, I thought we had 1258 as a support level. You can see it right there. Okay. But I thought, if we make a move anywhere down to 1267, you're going to see a pretty good little bounce from that. Well, we didn't even make it to 1267. Then we were challenging up in here and we said, well, you know what? The market's not going to be happy, which was our initial target with 1304. Market's not going to be happy with that after all the work technically it did in here. So that's why we went to the 1323, which was the 78% of this entire run here. And you thought, okay, well, we did rotate a little bit lower to 1304, but we really need to move at least into the 1290s to spark some, once again, value buying. So we made another run up in here. So one of the things that we've been not worrying, but warning about over the last at least well over a week and a half was be careful. The stops are going to get very, very tight. And I thought, okay, we're going to make a run down at 1304, but we're probably going to shoot beyond that. And probably don't be surprised we're going to get down to about 1293. Markets always overshoot. So it didn't mean like, hey, buy them at 1293. Now we had initially at one time we had some support around 1298. I think it was at 1299. I've been even 1299. But like I said, we were looking for a move to 1293. When we take a look at this on a fib, the 38% comes in, I believe, just below that 1280 area here. So be one moment. Obviously, the stronger dollar, higher U.S. yields have certainly taken its toll on the market here. Yeah, 1275 is going to be the 38%. Boy, that's going to be an attractive number. It would take out these lows by just a little bit. Really opens the door and, just got an even number there, so to speak. 1275 probably makes a sense where the market will eventually want to get to. My point being is that these people that bought, boy, they're really getting stopped out, and I think most people are probably going to say, well, I'll wait till I get a much better value area. Who knows? We might eventually make it down to 1267, because one of the things that we have to look at also is that if you look here on the exponential moving averages, we're just about ready to go shift into a sell mode. So now rallies back would be one to be sold. So our initial support, you see it right there. It's 1280. And resistance is going to come in right here at 1304. Every time I reboot my computer, it always resets these to different numbers, because there was no way that was our resistance on Friday. So it's going to be 1304. So that'll be the resistance. But like I said, you can potentially make it down here to this 1275, which is going to be the 38%. With that, let's go and move into the boons. But like I said, we're breaking lower and just about ready to shift into sell mode here in the gold. And then boons have been shellac good, but good. We're just about here at the 23%, just about. And actually, that's where we'd have some good support in here. But on a very shorter term basis, let's see here. It's going to be 65.14. And resistance, that's pretty clear. Resistance is coming in at right there, 65.50. Well, equities are up higher because of the potential for a deal with U.S. and China on the 27th. They're signing off. But I still like this resistance here. And that's going to be right there, 11,651. And see, this is wrong here because I know that's what we had a resistance on Friday. So like I said, when I reset, whenever I reboot this, I don't know why it does that. It resets these numbers, which is frustrating. And let's go with the support, which is going to come in right there, 11,538 coming across. But boy, gold has really been whacked pretty good here. And that's what we kept, cautioning about. So we've had it's gotten whacked pretty good here on the gold market. And that's obviously the big move. And of course, euro moving lower at this time right now. We're going to get the bias chart posted in the room. And thanks for joining us here on the European crossover webinar.